Hey everyone, this is your market recap for September 8th, 2011. My name is June and I have Chris here with me.
Hi, everybody.
All right, let's go ahead and get started. Honestly, not a whole lot to say that we haven't already said on Tuesday and for the last week or so. Today we had a down day, not a whole lot of follow through from yesterday, but a down day nonetheless. And basically the market's still very choppy, still stuck within this channel. And that's just the name of the game right now. I'm not going to keep, beating on a dead horse that like I said, we haven't said already. Continues to be choppy. Now, here's something that's interesting. The market rallied back up and stalled right at the top of this gap. So, I've mentioned this before. Top and bottom of gaps always make for great support and resistance, right? And especially if it broke above this gap, this first level of gap, then the next level of resistance would be top of this gap, which it stalled around here at 1205. So that would be your next level of resistance right there if the market wants to head higher. So I would watch for that. Now, depending on what camp you're on, I think I mentioned that if you are very super bearish, then we pretty much started our first leg lower, and this is the rebound, and then we can see the next leg lower breaking this support. So if you did short, and I noticed some of our members did kind of buy puts or shorted, then I would say maybe a stop above this gap area, or at least some sort of stop, either scaling out or completely exiting, would be decent, because that was the first level of resistance. If it continues higher, then the market isn't as bearish as it seems, and it might actually come back and retest the upper part of this channel, which is very likely. So the thing to watch out for is that 1205 level for SPX. But on the other hand, if let's say this is just a rebound and now we're starting a leg lower, and if you added to if you, let's say, initiated some puts or started shorting, I would say a break of this area, either the break of the channel or a break of 1140, could be a decent spot to add on to those puts or shorts. Okay, but just be careful that we might get support around this area, around the 1112, the 1110 area. Okay, so be careful with that as well. But like I said, overall market continues to be choppy, and today we've issued a bear call spread on SPY. It's going to expire next week, and that's one of the things that I like to do when it comes to a choppy market is basically sell spreads, because calling direction in this choppiness, it's going to be very difficult. So rather than trying to call direction, we basically sell some kind of spreads, since we have a bearish tendency. Sell spreads above the resistance, in this case above this prior high and above this 50-day moving average. And just basically let it expire. Let this market do what it's going to do while it's inside this range, and all we have to worry about is that it doesn't break above the resistance. Okay, so that's one of the things that I like to do when it comes to choppy markets like this. All right, if I do trade directionally, like I mentioned before, it's going to be quick, 1-2 holding time, 1-2 days worth of holding time, and that's basically about it. But as far as market goes, like I said, there's really not a whole lot to talk about that we can't emphasize more enough. Is just continue to be light and just stay in cash if you don't want to trade this. Chris, anything?
Yeah, let's go back to the SPX hourly view. And I just wanted to go in real quick to the psychology, also in depth on it. We see that the market moved up to that gap area today, and at that time it had also gotten above the 1200 level, which is another psychological resistance level, and it got above it for like maybe an hour or so, and then it quickly closed back under it. So a lot of traders on the floor are still saying prices are close to 1200 right now, and then we gotta think what they're thinking, especially what the crowd is thinking, get a jump on them. And they're saying, hey, if this market gets above 1200, maybe in the next couple days, we're going to see another rally. They're probably going to buy into that. And that's how we probably get a potential pop-up to the top of that channel. Now, if the market can't get above 1200 in a couple of days, there's going to be more pessimism coming into the markets and onto the floor. And when we see that, then we'll see a a retest of the lower part of that channel, if not breaking it. So this is just another way to gear up a potential if that situation, but the psychology of what's going on the floor and how the traders are going to react.
Okay, cool. One more thing I want to say is possible pattern. Now, I don't like to call head and shoulders unless it's like at the top, such as here, when the market's been extended, but there is a head and shoulders looking type of pattern, okay? So you can see if we're in the process of developing that right shoulder right now. But the main idea is the same, where if, let's say, this is a head and shoulders pattern, well, the main thing is breaking of this channel support line, which we basically have been talking about this whole few weeks already. So, sometimes I don't really get caught up on the name of patterns, but just basically look at price patterns and look at support and resistance. So you might hear other people talk about this head and shoulders forming, or if not, then you heard it first here. But keep an eye on that one, okay? And then if it is, let's say, a head and shoulders pattern, then we can take a measured move from the height of this, the head and shoulders, and then kind of give us a rough projection of where the breakage or the target is to the downside. But we'll worry about that once this channel breaks. Okay, let's kind of go over some stocks a little bit. Now, there's, like I said, there's really not a whole lot to talk about. The only thing that I saw that was worth mentioning today was Cisco. It broke out. I mean, overall, if you look at Cisco, it almost looks like an inverse head and shoulder. Not exactly the cleanest looking inverse head and shoulders, but it broke out of this resistance line today, got out above 16 and continued higher, basically stalling right at this previous resistance around 1650. So if you haven't gotten in already, probably wait for a break above 1650 just to clear this next resistance level. And today volume was above average, so that's a good thing. So that's constructive. But if it falls back under, let's say, this today's low, then it could be a false breakout. Okay, so I would watch for that. If you got in and it breaks under today's low, I would definitely get out because basically the pattern is no longer valid. So Cisco is something that's worth watching right now. The other thing is Ulta. Now Ulta just reported earnings today. You can see here after hours it's up above 60, and I like the pattern here, how you can see it's cleared this resistance level. So depending on the market, let's say if people like what Obama says tonight, and the market opens up higher, then for sure Ulta is probably going to gap up higher. Now, depending on how it behaves, if it gaps up and holds, let's say within the first 10-15 minutes, then that could be a viable gap up. Okay, again, depending if the market opens higher as well. But if the market opens lower and this thing gaps up, then I probably won't trade it because then it's going against the grain. Okay, so this could be playable tomorrow, but I want to see how it behaves, and we can talk about more as the day goes tomorrow. And a few other things I want to mention, or one other thing is I noticed a lot of let's say pharmaceutical stocks have been doing very well. For example, VRUS, this is a pharma stock. Now I know there's certain reservations when it comes to trading pharmas because you don't know if there's any pending FDA announcements. So you might wake up with either a huge gap up, which is great. On the other hand, you might wake up with a huge gap down as well. Okay, but it doesn't mean that they're not tradable. Just realize that there's that inherent risk when it comes to pharmaceutical stocks. So this one's this one obviously it's bucking the trend and it's moving higher on some pretty good volume. So probably on a pullback would be nice. The other one's QCOR, QCOR. Almost looks like what Hansen did a while ago, forming some kind of an inverse head and shoulders near the high. So a break above that resistance line would be good to at least nibble at this particular stock here. And then one more Jazz. Sounds as it spells as a sound, I should say. Right underneath its previous high here. Okay, so I guess if it can just base a little more, then that would be good. So overall, I think the either healthcare, healthcare such as Athena Health, nice breakout today. Healthcare and pharma stocks seems to be doing relatively well, and then you have these oddball stocks like Cisco or Arco that I mentioned on Tuesday. that seems to be kind of doing its own thing, as well as PSMT, which seems to be doing its own thing. So this is where normally you see, like, if this is a bullish market, you would see the big names leading, like Apple, Baidu, Amazon, Netflix, Chipotle, all these big stocks, Priceline. But so far these guys haven't exactly led, but instead you get these little smaller caps leading. So that means there really isn't any sort of leadership going on right now, and basically people are just buying on speculation, which isn't exactly a healthy sign. Right? You want to have institutional buying into these bigger names, because that indicates a healthy uptrend that people are interested in buying into this market. Okay, Chris, anything?
Yeah, let's go back to Cisco, CSCO. And I wanted to talk about how it was mentioned on the forum about Cisco. And usually when a stock is mentioned, I like to take a look at it even before what other people write about it. And I actually took a look at the stock maybe around the last hour of the day, hour and a half. And I was looking at it and I said, oh, nice white candle, volume's pretty high. I said, it looks like there's resistance around 1650. So I wanted to get a move above. So a move above 1650 would probably increase the likelihood of more buying pressure coming into Cisco. And I was thinking about it, but I wasn't quite sure yet, and I wanted to see what June's opinion was. And then I read about it, and then we had a talk about it, and he likes it to the upside, but he saw that diagonal resistance line that was broken today. I didn't see that, but it is really amazing how I start to think like very similar to the way June was thinking, and that's a tool that we have to really pick up when we're getting into the markets. Is we got to see like who trades and who really makes money, and you want to model yourself after that person. And it's just working alongside June, staying active on the forums for the past 3 or 4 years, and I'm actually able to look at stocks and say, okay, well I'm objective. This is what it looks like. This is what June has taught me. This is what I've learned from the forums and things, and let me see what they think about it. And then it's really funny how they have a similar type of thought about the trade. And this comes from just a lot of practice and dedication. But I think it's one of the best ways that, best ways to get above the learning curve, because there's a lot to learn about the markets. And when you model yourself after somebody who is consistent in making profits, you actually are learning faster than just reading a bunch of books, attending all these seminars, and this and that. I know traders who've attended, hundreds of seminars and still don't make any money at all. So this is probably one of the fastest ways to get up the learning curve when you're learning how to trade, or even just to brush up on your trading skills and become a better trader. First stock I want to take a look at is on my watch list is Baidu. Baidu is in a potential inverse head and shoulders. The reason why I say potential is because it has not broken above the top of its neckline yet. So I'm just putting this on my watch list. If it gets above that neckline, I'll probably be looking at it from the long side. Next stock that I want to take a look at is MOS, Mosaic. And MOS actually, it's pretty funky, but it is also in an inverse head and shoulders. And around the 74.50 level, 74.60 level is the neckline. It's about 4 points away. So if it gets above there, I'm just keeping it on my bullish watch list right now. Back to you, June.
Okay. Yeah, that's more or less it. And I want to give you guys one more thing here is in choppy conditions like this, what I find worked the most or the best is looking at the hourly stochastic. And because you have to go a little short term and not so much wait for the daily stochastic to get overbought or oversold. But you can kind of tell that recently we've been hitting some pretty extreme levels of overbought and oversold in relatively short amount of time. And so whenever the hourly stochastic gets, for example, overbought, we hit some kind of a near-term top and it pulls back, right? Overbought, near-term top. And then when it sells off and it hits oversold like this, then you get to that bottom. And then just recently, today, this morning, or even yesterday, market was hourly overbought, and you can see the pullback. So I would continue to use this, especially if the market continues to be choppy, to use the hourly stochastic to give you a short-term turning points. It doesn't work as well when the market's really accelerating like this to the downside. You can see that it moves so fast that it doesn't really catch up. But when it's kind of slowing down, and when it's choppy, this is when the hourly stochastic or short-term stochastic works the best. Not so much the daily, because daily will more or less be flat since overall daily prices will be flat. So that's what I use to monitor when to take profit, especially in these market conditions, and when not to get in. You know, for example, let me give you an example here where, you know, if you look at a lot of stocks, they're pretty much overbought short-term, and they were hitting that top. So it told you to, if you have profit, take profit, right? Such as RIM, where if you bought on a pullback, that when it got to overbought hourly, that was a good place to take some profit, and that was a good spot. Okay, so hourly stochastic, short-term wise, is what I use, and that's what I would call short-term overbought or oversold, and that's what I refer to, and that's what I'm when I say that, I'm referring to the hourly stochastic right there. Okay, so that's it, and just a reminder, there is a weekend webinar. I'll email you guys the link this Saturday, 10 a.m. Pacific time, and we'll discuss some more in details. And of course, you know, if you have questions or stocks you want to go over, you know, it's a live participation, so we'll definitely have some time for questions, Q&A, and other stuff, other topics as well. So with that said, then have a great Friday, and we'll talk to you guys soon.